We are going to discuss credit today. Credit is so important to your financial flexibility. It can help you qualify to buy a home, get good interest rates on your car loan or credit cards. It can even help you get perks like reduced rates on your insurance and get accepted to exclusive reward programs for frequent flyer miles. How would you like to know the secret of how your credit score is calculated? Hey, it's Investiva and your coach Kiana, and I'm going to give you the secret to good credit and how your credit score is calculated in just a few seconds. But before we get started, don't forget to reserve your spot on my upcoming masterclass, 3 Secrets to Making Your Money Work for You. You can get the link by subscribing on Investiva.com. You can also find the direct link in the description area on YouTube and on my profile on Instagram. Back to your credit calculations. Credit reporting companies use a complicated formula to determine a score that ranges from 0 to 850. I'm going to walk you through the 5 different factors that help credit companies determine your credit score. Once you understand each of these factors that determine your credit, you will be able to quickly make decisions to raise your credit score and fix your credit score. You'll also be able to easily maintain your finances to keep your credit score high. The first and foremost important category is payment history. Credit companies generally determine about 35% of your score based on your payment history, which is just as simple as it sounds. Make your payments on time and never let your payments be more than 30 days late, or it will affect your score. Approximately 35% of your score is based on your payment history. So it is so important that you make your payments on time. The second factor they use to determine your credit score is your debt to available credit ratio. Credit companies look at the total amount of credit available and then look at what percentage of that available credit you're using. Look at all of your revolving credit lines, such as credit cards, lines of credit, and stored cards. The best place to be is somewhere between 0 to 20%, but you absolutely want to keep them below 50%, or credit companies will significantly ding your score. Credit companies like to see that you're responsible in how you're using your credit and that you pay it off regularly. About 35% of your credit score is determined by a couple of factors, including the length of your credit history, which is essentially how long you have had active open credit accounts, and the number of accounts you have open. Having a number of credit cards or revolving accounts with low balances is excellent for your credit score and one of the most common factors of high credit scores, along with paying your bills on time. If you're looking to repair your earned credit, make sure you get a copy of your credit report. Negotiate settlements on all of your charge-offs and open some credit accounts using secure credit cards, if you have to obviously, and pay down your balances and keep them below 20% of your credit limit. If you pay your bills on time and follow these simple steps, you will be on your way to a credit score rating above 700 or more. So now you're on your way to an A+ credit. For more on how to make your money work for you and all these cool stuff, click on the link in the description area and reserve your seat for my next webinar, 3 Secrets to Making Your Money Work for You. Thank you so much for watching Investiva, and remember, make your money work for you.